The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, as we start the show. Of course, we're off about 8.5 points on the S&P cash. We're up about 1.5 off the lows of the S&P cash. And what are we? I'm going to call it 15% higher volume as we start the show than we did yesterday. We're just clicking on 2 billion shares, so we'll find out how things are going. But volume picking up just a little, and business is picking up in the short department. We'll talk about that today. As always, we'd love for you to come here at this time.
The following takes place between 2 p.m. and 3 p.m.
And because you know, the stock market is nothing but one set of psychological beliefs repeating over time. We need to know our history.
And it's all just a little bit of history repeating.
On this day in 1896, a salmon fishing expedition near Canada's Yukon Territory on this day. George Carmack reportedly spots nuggets of gold in a creek bed. His lucky discovery sparks the last great gold rush in the American West. They staked their claim the following days. News of the gold strike spread fast, though, across Canada and the United States. And over the next 2 years, as many as 50,000 would-be miners arrived in the region. Rabbit Creek was renamed Bonanza Creek, and even more gold was discovered in another Klondike tributary dubbed the El Dorado. Hey, there's an El Dorado gold out there. Stock. Starting to get it. Interestingly enough, those mines were in production. The last one closed in about 1966. But for the most part, there's still people up there panhandling and going through stuff. Yeah, that was their NASDAQ 5000. Very good one, Duffy. Yeah, that was it. And, of course, the man that really cashed into this was Levi Strauss, the jean manufacturer. Started putting rivets in his jeans to hold them together. Went through the first one. I think he died in 1902 or 1904. But once again, ended up having a great deal of profit. When he died, he was by far, even the gold magnates out there, by far the richest gentleman on the backs of the gold strikes. In today's dollars, he would have been worth about $150 million. There was a lot less money back there floating around, let me put it that way. 150 million, he wasn't a piker for making jeans for the miners. But there's a old parable in business that you always want to be selling the picks and shovels and jeans to the people that are all going headlong down the rabbit hole of gold mining. What else can you say? On this day in 1896, the last big hurrah. Had some people email me some questions. You can always, too, at path@tfnn.com. And had some questions about some stuff. Oh, did I have them? Did I close it? I think I closed it. Let me get this back up here. But the question was basically what was going on. They heard of this thing called the Indie Web, and they wanted to know what was going on. Basically, Facebook is what Yahoo dreamed about being in 2000. It was going to be a one-stop shop for everyone to come and never leave. Therefore, they would have everybody captive. They would own the internet. They would be able to define the standards that were coming down the pike. Of course, back then they called it being a portal, i.e. you go to the mall to get all your shopping done. Facebook has been more successful than most that have tried this. But many of Silicon Valley knows that if they build on top of Facebook, Facebook can tell them to pound salt at any time. It is a double-edged sword. You have a lot of customers that may come to you, but at the same time, Facebook can decide to do whatever you're doing and throw you to the side of the curb if they decide to take your business away from them. There is literally nothing you can do. And many have broken stride with the Facebook folks. And their movement is called the indie web for being independent, not for having anything to do with Indiana and the Temple of Doom or any of the rest of the stuff. But they call themselves indie webbers out there. And Facebook does not like that either. But big discussion today that I saw on one of the financial infotainment cable stations talking about whether or not a lot of these companies are just building on sand to one day being eaten by Facebook and thrown to the curb for their great business idea. Facebook is just, we saw already copying a great deal of other people's stuff. And there's nothing illegal about it. It's just that if they'll copy other people's stuff, they'll copy the stuff that you do on their platform. But look for the indie web to be a much bigger thing in the coming time. Haynes Celestial dropped the chalupa out here. We'll give them a losing horn. And had some people ask me some questions about this one today via email also. And it's, I'd say 97% of the time, these companies end up being worth a lot less than even the drop on the first day after accounting irregularities. Let's just call it what it is, accounting fraud. And how did this come about? Well, they were trying to be bought out. And, of course, they'd been pushing that around for a while. So the stock was much more expensive than it probably ever should have. But why did they come out with this? They haven't been doing anything different than they've been doing for a while. The reason was that they let somebody else look at their books. And that company that was looking at buying them basically said, we're going to the SEC with this. We're going to go to the accounting board. You guys are kind of a bunch of frauds. And the Haynes people said, well, we'll just, we got earnings coming up anyway. We'll just do it then. We'll tell everybody that we've got some problems we need to fix. But the buyout, probably blown out thing. Many of the biggest names were and have been pumping this stock on the financial infotainment shows.
Bring me the head of the false prophet, Jim Cramer.
He was one of them. There were others. The Ponytail Boys were all over this. Some others. So a lot of retail traders, I think, kind of got sucked into this. We'll talk a little bit more about what you should know of accounting disasters and or AKA fraud when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Code Red, repeat. We are Code Red.
Well, I don't know. Maybe that's a little extreme, but we have broken the low of the day on the S&P cash. So we can only see how the rest of the day comes out. We will continue on. Somebody was nice enough to email me the actual link to the indieweb.org, and it's not spelled with a Y. I just was in a hurry and typed Y. I didn't look it up. I've seen this stuff before, so not a big deal. But they have a nice website out here. But I just thought it was very interesting that that whole article. The whole argument going back to Yahoo's days of being a portal, which now basically is what Facebook is very interesting for this argument to come back. But so many people in media have sold out their services to Facebook, Wastebook, Fakebook, that it doesn't matter. But there's more on it if you want to check out the IndieWeb, INDIE web.org. We were talking about Haynes Celestial. We'll circle back to this. Like I said, about 95, maybe 97% of the time, you want to apply the cockroach theory to bad earnings and or the accounting issues brought up during earnings. That is, if you see one cockroach, there are a great deal more. But if you kind of read between the lines, my guess is exactly that this thing all blew up because they gave the books to another set of folks, and apparently someone was not going to keep their mouth shut. It wasn't going to be, we just don't want to buy you. We're going to rat you out. So it's probably even worse than most people have thought. And normally it takes a year, maybe a year and a half, a new CEO, everything to wash these kind of companies out. This is not too far from Vertex Pharmaceuticals, where these guys have been buying up every product down the line of your grocery store. And they've been using and borrowing a great deal and overpaying and aggressively marking that stuff up in their books. So the truth, when we get to GAAP, hard to actually know. Like I said, it may take a year for this to settle out. and everybody to figure it out. No reason to go where others may not or others fear to tread. TJX, we talked about it. I was very reticent to think that they were going to go higher. From the other retailers that we talked about the last couple of days into the last week, many of their inventory levels had come down vastly. And that means that TJX is not going to get a lot of last year's clothes dumped on them for a very low price. And they kind of made some sideways comments about it. They didn't come right out and say it, but I'm going to say TJX and the other Ross stores, other stores that depend on other stores doing poorly, i.e. having a lot of leftover merchandise, will probably maybe see this thing peak out. I know everybody wants to buy it no matter what, but my guess is that the cost of goods is going up for these guys. They had kind of the best of both worlds, i.e. people wanted to buy clothes. They weren't going to pay up for them. The other retail, especially mall retailers, had to get rid of last year's clothes. TJX got to buy them up for pennies on the dollar. They made money. That ain't going to happen this year, or it's going to happen a lot less. Let me put it this way. And that becomes very problematic for these second-tier retailers that basically sell last year's clothing at a discounted pricing. Dick's Sporting Goods was up, mostly, as far as I was concerned, based on them closing a bunch of the Sports Authority stores that they bought in bankruptcy. The earnings were okay, but I think it's, maybe we'll look at the chart later, but I think it's a little overdone here. It seems like anybody willing to close stores is going higher in retail, and I think that just got kind of tagged with the same broad brush for Dick's. The earnings weren't bad, but I didn't think that they were that good. Maybe there was more shorts in it than the numbers indicated, but I didn't see that many to make me think this was that big a deal. The spies are falling. We talked about this last Friday. I said, run, Forrest, run. Be very afraid, because the big men of the street were shorting the living daylights out of the market. I didn't know who they were at the time, but the 13Fs were filed on Friday. They came out late yesterday on the SEC's website that tracks all this stuff. And you could have picked up that stuff last night. Of course, it hit the news outlets if you were looking for it this morning. But they didn't make a lot of hay on it on Financial Infotainment TV or on many of the websites. You kind of had to dig for it. But just about everything I said about the big men of the street going whole hog short is true. Paul Tudor Jones bought put options on over almost 6 million shares of the SPYs. The fund now owns almost 8.34 million shares of the exchange-traded fund, making it the fund's largest short position, the filing shows. George Soros not only getting hacked, computer hacked, and finding out how truly evil the rotten bastard is, also doubled down on his bet against the S&P, buying put options on just over 1.9 million shares in the Spiders S&P 500 ETF, making it also his largest position with over 4 million shares. I could go on and on and on, but we don't need to. The big billionaires have gone short. They tend to be a little early because it takes a while to build a position. You have to have a market that you can actually go in and do this at a decent price, and they've had it. They've had a bull market off this low where this market did nothing but rally up off the Brit exit, and they are putting their money where their mouth is, but keeping the risk in line by using options. Now, these guys are not don't have options that expire this Friday. These guys, when they buy their option positions, if you look at the 13Fs, 6 months, 9 months, 1 year, year and a half out, and they start really coming into and around 2,000 on the S&P. So these guys are looking for some fairly large downside in this market. So keep an eye on that stuff. But it is interesting. What else do we have out here? Google is clouding up. Google is doing a lot of stuff with its cloud platform. Don't know if this is going to make an instant thing, but look, 3-6 months down the line, I think it is going to be a big deal. And why? They have their own software for databases. These are nearline databases, which means that if you click on something and you want to use these things, it may take 3-5 seconds for the website to give it back to you. It won't be instantaneous like many, but there's one other big thing that they're doing. We'll talk about it when we come back. It has to do with security. The NSA will not be happy. Give me a ring, 877-927-6648. Email me at path@tfnn.com. And, of course, post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the S&P low held for a minute so far, but what we know already, we can just go to our market dude ranch guy who says,
They ain't over yet.
Yeah, the day ain't over yet. Anyway, we were talking about Google. And the most important thing, they may get a lot of business. They're allowing anybody to bring their own encryption keys to their cloud storage services, which means that they wouldn't have the ability to automatically unlock anything that's on their cloud storage systems. The NSA will not be happy. And that's going to be very interesting whether or not the government will force Google, Microsoft, Amazon, and the rest to hold the keys for any storage on their systems here in or under the control of the U.S. Hotels.hack. If you went to any of the hotels that charge more than about $100 a night, bunch of more got hacked. We saw that over the weekend through this June. The chances that hackers have your credit card number is about 50% right now if you've gone to any hotel, not just these. They tend to and continue to be one, especially the higher end hotels, to be the hackers' choice du jour on any given day because, of course, they move around a lot. It's easy to use those credit cards. And what else can you say? Don't stay in a hotel. After the bell tonight, we've got Cree and Urban Outfitters. Everybody else is pretty much reported. We've got Walmart coming up, but we'll get into some of the charts right now and take a look. What else do we have? Let's look at some of the tests out here. Not a lot going on. The markets have been giving signals for about infinitum that we'd gotten to previous highs. Let's check in on the volume here while I'm thinking about it. 2.11 billion shares. So it's still there. Maybe kind of in line now with yesterday. So no volume yet. I think today is going to be much more about the last 30 minutes than anything else. Autodesk. What do you got here? Autodesk, 1.5 million shares. What we had yesterday, almost 1.6. Just 1 million so far today as it hits its April 27th high. Energy was not all that exciting off the low, but it wasn't that exciting off the high either. I think there's better lower hanging fruit out there. GoPro has been kind of on a tear. Continues to be one of those stocks that everybody says that's going to be a buyout candidate. I'm not believing it. A great deal of companies are coming out with GoPro cameras for this Christmas at about half the price. And some of the ones that have gotten reviews already are rather spectacular. So look for these cameras that have retailed somewhere in the neighborhood of about $400 to come down a great deal. Some of them are, and some of them are not using Ambrella's chip. And I'm going to have to do some more research in this. But if you see GoPro go down, probably going to see Ambrella go down too. This would be a very interesting one to watch out here. I haven't shorted it. I need a little bit more, but I like the setup so far. December 1st, $64.95 with 5.3 million shares. Yesterday, we came into that high with 1.44 million shares. Today, 700,000 shares. I think you may be the only people and me that have seen these ads for these companies with these GoPro-like Japanese, let's call them Chinese rip-off cameras. But everybody has given them pretty high marks. They really haven't flooded the United States yet. But when they do, and if I can verify they do not use Ambrella chips in it, watch out. Both GoPro and Ambrella could see the loser horn. And no one wants to see the loser horn, do they? Amstar Pharmaceuticals, AMPH. July 13th, $18.30, 3.2 million shares. Intuit, the last couple of days with 850,000 shares. Energy was pretty good up off the bottom on this one, but 80% off its lows, or 75% up off its lows on March 1st. Kind of tells you that this one's kind of long in the tooth. APD is Air Products and Chemicals. This one is one that we've talked about being canary in the coal mine. You want to watch this one very closely on the close. If you're not manufacturing things, you don't need their nitrogen and helium and hydrogen and everything else that they sell for air products and assorted chemicals. But they're pretty much known for their giant tanker trucks that look a great deal like gas trucks, but just a little different. You'll notice it. And it says air products on the back. It'll always say something like liquid nitrogen or liquid helium or hydrogen or something like that that's used in industry. But a big candle out here today, 1.4 million shares so far against the 2 million share on April 28th. That would probably go in line with what we've seen for numbers that suggest that we are probably already in recession. Discover Financial Services got a triple top out here. You had a higher volume high on April 21st, so we're going to get one more retest of this $58 area. We got that yesterday with 2.9 million shares. Not a lot of volume today out here, but, you know, the energy, you know, I can probably find some better ones in this, but starting to see some of these financials set up and look like they're going to have some big problems. Of course, with Dick's up a little bit today, spreading the love out here is the finish line. This one is looking very interesting. I don't know how shoe sales are going to go after the Olympics. They may go up a little bit. The chart says something else. The chart says this September 25th of 2015 gap down that happened on 13.5 million shares should probably be attacked with more volume than yesterday. It was 1.1 million shares, or even today with about 1 million shares. Probably going to be just a little bit more. As we've always said in this thing, one of the best features of timing the trade, the art of timing the trade charts, is these double gaps. They're going to show you a lot of times exactly where the stocks are headed. If you were thinking about, I don't short stocks below 30 bucks, but a good example of where you're going to find massive resistance is where these two gaps actually come together. And that's going to be right at the $24 mark. So you don't have many pennies or shekels or what else is out there? Yen to go to find this one lining up fairly brilliantly. FRC, when we come back, what was this? First Republic Bank. This one giving a much more vibrant signal that it looks like it has a top. We'll talk about this as we come back after this short commercial timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
In some of my songs, I have casually mentioned the fact that I like to drink beer. This little song is more to the point. Roll out the barrel and lend me your ears. I like beer. It makes me
Well, we checked in with Boston Beer on earnings last time, and it had a nice little spike coming right up to resistance here. I had somebody email me about this one. I don't know what you could do with this. If I was long, I would probably be selling it here in 190 to 195 range. If I was trying to get a position on it, I'd still have to wait for it to come back in that 165 to 170 gap range that it doesn't have. You would think or hope that if the market pulls back, that you would be able to get it into that lower range, but not a bad looking chart. I just don't know what you could do with it here. If I was long, I'd be in the selling mood, and if I was thinking of shorting, I would look elsewhere. Who would short a beer company? That's almost un-American. First Republic, FRC. This one had a nice spike into May 31st with 2.2 million shares, $73.22. Spiked over it with 720,000 shares on August 8th. It's been kind of going sideways out here today, just 400,000 shares so far. You know, there's some of these are hanging out at high, still with no volume, and you always have to worry about that. General Dynamics on the heels of some fairly decent good news on Lockheed is right up at its high. GD is August 19th high at 153.76, had 4 million shares. Unfortunately, you only got half that yesterday with August 15th, bringing in 2.1 million shares. A little volume out here, about 825,000 shares so far. Again, these things may have topped. I wouldn't be shorting any kinds of arms dealer at all. Just because there's 100 places right now in the world that can blow up at any day. Lincoln Electric Company, LECO. Somebody was talking about the utilities and maybe those looking rather the weakest. This one looks rather the weakest to me, just as a regular pattern. I wouldn't be shorting it. There's just, the thing moves like mud. Maybe there'll be a big correction in this, but I don't see anything that looks like it's going to do more than dime and quarter down all the time. April 19th, $64.79, 1.4 million shares. And of course, the most we've gotten into that is about 460,000 shares. Today, just 87,000 shares. Everybody's moved to these move to these companies that they think are safety companies, or a great deal of people have. And it's not that they don't go down, they just go down a great deal less than the rest of the market. And a lot of people think that they got to park money somewhere like it's a religion. It doesn't matter if you want to put it in your mattress if you don't want to be short right now. Micro Semi, a triple top out here. You had this $39 area challenged again on March 30th. Had a lot of volume going into that, so you knew it was going to get tested one more time. As we went through there, we really never had that kind of volume at all. And it just a lot of this stuff looks rather weak out there. Micro Semi, triple top. What else do we have out here that's interesting? Another triple out here today is Parallax International, PRL or PRXL, he said. This one, you were looking for about 940,000 shares for the January 6th top as it bangs against this gap that goes back for a ways at $70. You spiked into it with 316,000 on a big doji yesterday. Today, down a little on 116,000 shares, so you don't have any confirmation yet in the energy. But I do like the pattern out here, and that is very strong from that January 6th high to the February 9th low. When you look at the June 17th low back up to this high, the energy was off by about a fourth. So a nice trading range out here, and one that looks rather weak. Would have to do more looking to see just how short that is on a thinly traded stock. Raymond James Financials, well, we're getting a pretty good signal out here that there aren't a lot of people stampeding to get in line on this one. It goes back to its gap from the 4th of January, as so many stocks in the entire market have. We had 1.4 million shares on June 6th at 56.69. We spanked that yesterday. Spanked it hard. 377,000 shares, though, compared to that 1.4 million shares. If you just look at the gap down, it was 2.2 million shares. Man, do these broker-dealers suddenly start to look weak? What's Goldman Sachs look like? Come out here and do it up. Yeah, this is kind of the same thing, isn't it? We're not quite there with Goldman Sachs, but certainly we're there with half the volume. 2.2 million shares yesterday, 1.8 so far today, as we're about $2 shy of hitting the April 21st high of 4.8 million shares. XEC, which is another one out here starting to hit this previous high. Cimarron Energy, XEX, go back to the April 2015 high, 132.18 with 2.6 million shares, and we hit it, kind of confirming out here on the right-hand side. May need just a little bit more. This thing is down. Got a nice gap down there around 110. But it looks to me like a lot of these are, again, very weak, challenging previous highs. Another comment to ask about Microsoft out here. We told you that this thing was one of the weaker ones out here. Nice gap down on Microsoft today. As I was saying, maybe back down here at 53, you might like it. And I'm thinking it's kind of long in the tooth. Almost all the good news in on this one. I've liked it when it was back down there at 22 bucks, and it was getting the new CEO. Pretty nice run for Microsoft. Wouldn't short this. I think there's a lot more lower hanging fruit out here to short. But probably this and Intel are all setting up for some nice pullbacks in the market. Back here, there we go. Get the we're at 2181 on the S&P. Cash volume is 2.2 billion shares. So volume is pretty much the last 30 minutes kind of dried up. Again, I suspect it's going to be a lot more about what happens at the end of the day than right now. We're looking at Intel. Now, this one had pretty much the same highs. It's been hitting about 41, 42, 43 million shares right at this $35 line. Kind of completed a move again, same kind of energy. What I dislike is that the energy off this May 19th low to the high on June 20th, where this thing ran into earnings and came back down, was the problem. You know, not enough money in this one to short it either, but I do think it's getting ready to pull back. Maybe 35.50, 35.60, maybe top this one out too. We'll be back after this short but lucrative timeout for TFNN.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we come back. We'll look at a few of the other ones out here. Facebook was selling off a little bit earlier. You know, you don't have a great deal. Had a question about what options look like. And as I said earlier in the week, everything still points to this market, ideally for option market makers, would expire somewhere around 2120, 2140, somewhere in that range. What I will tell you is that normally there's some money to be made by moving a market down. There is an absolute big load to be down. Every 10 points is worth $1 billion pretty much in the SPYs, which give you an idea that, you know, if you're one of these guys and you're an option market maker, you call up your buddy and say, hey, maybe it's time to downgrade Apple. Maybe it's time to downgrade Intel or Microsoft or any one of a dozen different companies. or surprise earnings announcements, you need to come out with it this week, Mr. Customer. I know we do our work for you, and we know best. It's time. You need to do it now. Or leak articles of demeaning or diminishing value of a company. Probably see a lot of these we're really trying to help the little guy out with upgrades and downgrades. Probably all downgrades this week. I don't suspect that there's many of these big men of the street, the big houses on the street, that want to see this market go up through Wednesday. I suspect that we've got, maybe a test of 2120 to 2120 or to 2140 coming, probably on the lower end of that. And then maybe close back up at 2140 or 2150 or something like that. I think once everything gets going, it's going to be kind of hard to pull back from. But as I said, there's money to be made long and short. But normally the people on the street have it fairly right and aren't this far off. They may not be successful, but they will try, and they will do or die. But interesting enough. What else do we have out here? Let's take a quick look at IBM. We had been long, and in the Tech Insider, we liked IBM for a variety of reasons. We'll like it probably again soon enough. But you really have to think that the chances of this thing blowing through these incredibly high resistance levels are going to be problematic at best. This one, you had huge volumes to get through. It wasn't a horrible looking chart out here. You needed it about almost 14 million shares though for this big gap down that goes to about 163. You spiked it with on August 11th at 164.95. And it's kind of rolled off. My guess is that this thing is probably coming back down to this double gap again that they like to do. Even if they're small gaps, if they're double ones at that price point, which you can really see plainly here with the two different colors. The first gap occurring on the June 24th, and the second one gaps over the exact same range on August the 8th. And that is a pretty good indication that that's where this thing is probably coming to. About 154 is my guess. Volume not picking up today. But again, one of probably the better stocks out here. And of course, you've got Buffett behind this big. Let's just put it the way. He's underneath this thing big time. It's going to be hard to break this down now. In the meantime, hang on for Tom O'Brien and Andy Heck after him. Meantime, sell when you can, not when you have to. See you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.